Hello, everyone, and welcome back to the J22 Report. I am your host, Johnnie Market. You all know that drill. Smash that like button, subscribe if you already haven't. Just a little disclaimer, nothing should be construed as financial investment advice. Just my thoughts, my opinions. You can read more on the disclaimer below. Anyway, let's get into this week's stuff. As you know, new life, new everything. So I haven't gotten a full schedule like I normally did. So let's go over the data of this week. You got the Dallas Fed manufacturing on Monday. We're bringing back manufacturing. Yeah, right. Won't believe that. It's certainly not coming under probably this decade. But anyway, and look at the trade deficits. Those are huge. They blame them on the tariff. They say they're front running the tariffs, which could be true. A lot of business people are a lot of the elite or they're not really that smart and they don't understand what's going on. That's why the businesses aren't doing well. So you see that, of course, Red Book sales. Now the home prices, those are up, but less than expected. 4.5%. The consensus was 4.7. Home price index on a month basis, that's up 0.1%. And then job openings, those were way less than expected. So you can see the job openings, this is where the economy's going, and those were horrible. So, and look at the Fed service index, that's down. And the big thing today was GDP. That's negative now. And if we get next quarter, it is a recession. Now they blame it on the trade deficit, but the thing is, sales and everything else is going to be way worse because these were businesses front running. The consumer's not spending. The consumer is broke, and I'll show you more. So this is not, I wouldn't be surprised if we saw another quarter. And you can also tell ADP employment. This is the private sector, which is supposed to be doing so great under under this new administration. 62,000, way less than expected. This is the thing. Everyone's laying people off. And federal governments are, which from an economic standpoint was stupid. Because they're destroying capital because, those people have loans, they have mortgages, they have all this. Now they'll have to default. That destroys capital and savings formation, which which is not good. And that's why you're seeing stuff like negative GDP. They blame it on trade deficits, but front running, but just not happening. Chicago PMI, that's negative again, anything below 50. And the PCE, which generally that would be good, but the reason why this is happening is because the economy's tanking. Month over month, zero. Personal income, which I do not believe. Pending home sales were actually good. That's year over year. But I think this is just a one-time thing. This is seasonal, the selling season. So anyway, but you can see we have negative GDP. Private sector's not hiring. Jobs aren't coming. A lot of capital destruction is occurring. And that's why the stock market's tanking. Right now we're in a bear. Well, it's not tanking. We're in a bear market rally. That's what in my opinion. Now, it could, I expect the stock market, let's see where the stock market went. Stock market, yeah, it was up today, got a bid, but right now the S&P is at 5,500. And what I think could happen is it did a double top. It could break through. This could be the last rally. I said in this podcast that I think this year's the last year of any type of rally. I don't rule out new lows, but And that's what I think could happen. I don't want to sound too cocky of a bear. I'm not like I don't really short things a lot. I don't short things ever. I'm not comfortable with options and everything else. But if I were to short or do anything, I would not be shorting right now. 5,600, 5,700. Who knows? But if you look at today, it was down, down, and then it just towards the end shot up, which is actually bullish. On a 5 day, it's up. 1 month, it's still actually negative 0.76. And on a 6 month, it's still negative. And year to date, it's still negative 5% but it could still go up. And of course, gold finished negative. I think this is a corrective phase. I don't know exactly. Somewhere between 29 or 3,200 is probably where gold is gonna correct to. I was listening to a new person on YouTube, and they think this is what I'm doing. They think 3,200 is when they're gonna start buying again. He called the top at 3,500. I don't know who it is, but I expect a correction 3,200, 2,900, and then there'll be a wave, another final run. I think silver will get back to 50. And Jordan Royburn, he said another thing interesting on the interview is that I agree. I think when silver breaks 40, the miners will make a big breakout. Silver miners and miners in general, I think. But if you see that, it's down 46 overnight, but that can change, in my opinion. But yeah, that's where we're at right now. Just a little couple of news things to start talking about. I just thought they were interesting. You want to know? Beloved ice cream chain suddenly closes multiple stores, and it's, as you can see, the blizzard. It's a Dairy Queen, which, I mean, the most Dairy Queens are in Texas, and multiple stores in Texas, like all over. They're listing said 25 in Texas closed, but they said this is after 12. And the thing is, Texas is a strong economy. That shows, and I mean, I've been reading about this, about Dairy Queen. And yeah, I think this just goes to show people can't go out to eat. Look at this. Texas has the most Dairy Queen restaurants still with 560. But look at this. Multiple Dairy Queen locations are closing, must liquidate their assets. So I think this is more indicative of what's going on. This is a slow bleed, and slow bleed of capital's construction. You have to remember, this is a franchise. People own assets. They had careers. This is, everyone likes it. It's ice cream. Even if you do. Now, I think the actual food, not ice cream, is nasty. But yeah, I like a good blizzard. So, what's also more indicative right here, Starbucks. I didn't even see this. They say global, but yeah. Starbucks posts bigger than expected. Oh yeah, of course they can't just show the headline. Well, it basically said Starbucks post bigger than expected drop in global standards. And look at this right here. I'm going to highlight it. Weak U.S. demand. Starbucks is a higher end, even though it's a national chain, it's a higher end coffee shop. They have really good drinks. And it goes to show, look at this. Inflation and economic uncertainty hit demand in the U.S. That's why. So everyone talks about Nicole's strategy, I think, is new management or new CEOs or corporate by reinstating a coffee house atmospheres and reducing production and service times. Yeah, the only problem is that's great and all, but the economy's getting worse. And when people have to cut from their budget, they cut the most unnecessary things, and part of it is coffee. Those financial results don't reflect our progress. Yeah, you have a much better product because I've been to Starbucks recently. But guess what? Your consumer has less dollars to spend on you. So maybe instead of getting that Starbucks coffee in the morning, maybe they do it as a treat, maybe once a month, or they do it, if they have a 3-day weekend, they'll go there and that's it. And they'll be like, that will be my treat. That's my new vacation. Instead of going to overseas, or maybe instead of going somewhere vacation area in America, maybe I'm just going to go to Starbucks, on my days off. So that's what it does. And so instead of, going, look at this, international stores rose 2%. Of course, like a stupid computer, just there it is. I highlighted it for you. International comparable sales rose 2%. You know why? It's because foreigners, generally speaking, are richer than Americans. So that's why they are. I have a family that lives in Eastern Europe. They vacation a lot more. They do a lot more things than Americans. They have more discretionary income. That's just how it is. So foreigners are richer than Americans. It's reality, even if you're never told that. So more on the economy here. Americans expect the economy to sour. When's the data going to show it? Now, if you have sentiment this bad, this is why I think the market's really bouncing right here. Americans, they said most economic data isn't flashing red yet. Well, it will be. And everyone blames it on the tariffs, but the reality is everyone blames it on. But the reality is the economy's in this bad for a while. Tariffs just gave them the excuse to actually publicly talk badly about the economy. So we will likely continue soft weakness in the server data before hard data starts to weaken around mid-late, in which point higher prices, weaker spending, slower hiring could emerge in the official statistics, Goldman Sachs. I mean, if you look at it, it's been mixed data so far. But you can see the stock market is no longer making new highs. And the other thing is most Americans are heavily involved in the stock market. That goes, everything goes. So Goldman Sachs, 45% probability, whatever. So this is another thing I talked about. Home prices decline in major markets, and they talked about right now they're overall up, but major markets are starting to crack, and they talked about Texas, Florida, but not just that. They talked about many other places too. One of them, DC, which is normally a stable, and this is how the '08 started. Housing bubble started. Just a couple of Arizona, the Sun Belt is doing poorly. This is going to eventually spill over. So right here, Austin, Tampa, Jacksonville, Nashville, San Francisco, Orlando. Let's see, skip ahead. Atlanta, Miami, DC, and Minneapolis. So a lot of it's concentrated in the Sun Belt area, with the exception of DC and Minneapolis. And look at this. Home sellers are now giving recession concessions, 44%. Record high was 45% in 2023. So you can tell what's propping up the housing market. Well, easy. They're making concessions so they can give the price. Oh, well, look at this. New homes are now cheaper than existing homes. Existing homes, they're going to start to come down. a lot, because why would you buy an existing home when you can buy a brand new home for cheap? So I'm actually glad they're doing this. I might do more of these as we're talking. We can look. It's not really saying too much. And look at that, home prices. That's CNBC starting to crack. Normally, that's a bullish sign, and that's probably why you saw home prices go up so much. But so every now and again, they leak the truth on CNBC. When will it start to crack? Uh, I always said this was the last one. There's the auto loan bubbles, the credit cards, home bubbles, commercial real estate. I do have to look at this. And you're starting to see the housing market crack. And this is millennials selling homes they brought in the pandemic after realizing their mistakes. And this is interesting because there was a couple of things that I said that people are miscalculating. Is that your mortgage was 86% of millennials selling their homes said they made a mistake in buying a home during the pandemic. Look at this. Homeowners pay an estimated $24,000 annually on top of mortgage. Well, yeah, that's the thing. I always said there's property taxes, many other fees, repair, maintenance. You know, it's not just your mortgage. That's not your only cost. Yeah, it's tax deductible, but when you don't make much money anyway, it's not going to really help you. So, yeah, you look at that. And the other thing I wanted to do was they said one of the mistakes is they thought remote work remote work was a key reason. I'll just say this, remote work is good and it's very productive, very easy, regardless of the BS you hear otherwise. The main reason for the return to work is because they want to fire people. See with Doge, first thing they do is return to work, and then they start sniffing out who to fire. Has nothing to do with any of that. But I'll just say this: the elites, nothing that benefits you, they will allow, even if it helps. I'll give you an example right here. There's many studies where a 4-day work week can actually do better. They actually had companies mandate a 4-day work week for this study, and employees were more productive. They took less PTO, and they worked, because they were working 4 days instead of 5, they worked at a much faster and more productive place. And it actually did better. And what's a country that is more productive and better businesses? Now they're doing this for birth rates. They're going to 4 days a week now. Tokyo, they've introduced a 4-day work week to improve work-life balance and address the declining birth rates. Now, it's actually everywhere. It's not just government employees, but this is just AI, ChatGPT. And yeah, no matter what, they will not implement something that's, until we get a new elite, we're not going to get. And this is why I embrace the bear market. It's going to wipe out the old elite. And that's the good thing. And it's why I embrace it. But I don't know if we're completely there to bear market. We might already be in one. I think this is a bear market rally. If you look at gold, let me see if I can get a gold chart real quick. I might just do GLD. Just all you need is trend purposes. Some toolbag commented said a good technician doesn't do. And, if you listen to my channel, you would know I always say I'm not a technician. So let's get this real quick just to. So anyway, let's do all. If you look at this is around 2011. GLD was around 177, and then around 2012, late it was at 166. This is about, let's see, gold topped around June. And this is almost, this is like a year and a half later. And then around 2000, April of 2013, that's when it really tanked. But from June of 2011 all the way, I would say till January of 2013, for this case, 11 November 2012, gold just hovered at the top and then tanked. And I expect the stock market sort of crash to be like that. The bear markets, this is what they do. They aren't like bull markets. Bull markets, they do everything they can to scare you out. Let's see. Let's do the spies, because that's the stock market. Now we're sort of in euphoria. But if you look at the 2009, all the way up till 2013, where S&P, the spies were at like 81, and then it's at 140. No one even heard of that. And then in 2015, it went sideways because the normal people started getting in. Then it started going up, but then 2018 sort of went sideways, so people left. Started dipping in 2019, crash. And then it went way up to 2021, comes back down. Then 487, that's the end of 2021, comes back down to 364, gets people. And now, I mean, you can argue, but personally think we're more to 2000 where it's going to be, or 2008. But yeah, I think it's, all this debt, the bankruptcies I talked about, it's going to go a lot more. And this is what I think it's doing. It's just doing a long, maybe 1 to 2 years, maybe even a year. Sort of, it's suckering the people in, then it will probably crash down. Let's say right here, let's just 554 to 300, rally back up. 450, it'll probably keep going down. So anyway, that's all I have. You can see GDP is negative, though. The mirage is over. They can no longer pretend the economy is good. And going forward, I think the data is going to get worse, not better, until there is a economic stimulus, which I think is coming. And who knows? Maybe they might let the economy sort of tank so they can pass these tax cuts. Anyway, that's all. Don't forget the disclaimer, not financial investment advice. I will talk to you later.